Hey guys, you've joined us live on Moneycontrol, and I'm looking at gold prices right now, which are trading at an all-time highs in the Indian markets, and they did hit an all-time high for the spot gold in the US dollar terms as well. As we saw the US Fed chairman talk about the interest rate hike and then the press conference, the gold prices just kept rising. It was a knee-jerk reaction perhaps, as the US Fed chair said that from here on the tightening perhaps would not continue, and also that they would depend on the data and the financial indications to ensure on what really needs to be done going forward, and markets clearly have seen this as very positive. So we saw $2,080 per ounce overnight, and then of course there was a big profit taking on the lower side. 2,040 or 45 is how we are trading right now. For the Indian markets also, we saw an all-time high of 61,400 rupees per 10 grams, and the markets seem to be moving around those levels right now. So we're looking at 14-month highs for the gold prices when it comes to the futures market there. Silver not too far behind. It's trading at a one-year highs in the global markets and just about 500 rupees away from an all-time high in the Indian markets as well. Well, the support comes in, one, because the rate hike has been as expected lines, and then on the other side you have dollar index, which has weakened below 101 right now. There are fresh concerns brewing up now with the Russia-Ukraine war. There has been escalation of words, and that has been supportive, and then the markets also are looking at a very strong central bank buying as well. Remember, last year the global central banks bought gold at a record level. No year has seen global central banks buy as much gold as they bought in the previous year, and we have seen that trend follow up in this year as well. So the first quarter, the month of March, have seen very strong buying from central bankers here. The other thing is that you also have seen strong HNI and ETF buying coming into the markets also. It has been about weak economic data coming in from US, Europe and China that has been supportive for the markets, and then it is also about the banking sector contagion concerns which are keeping most investors staying long in case of gold here. Well, while the HNIs and investors are buying, when you talk about the Indian markets today, there are basically no buyers. Indian markets, the gold prices are trading at a discount in the physical markets. There are not too many buyers, but there definitely are people who are coming with their old gold to make sunshine with these current prices. There also is a lot of exchange of gold happening as well. People are getting their old gold, making into new and taking it back. So that is the business that is happening in the spot markets right now, because the way the gold prices have simply run up today, the buying clearly has declined quite sharply here. The expectation from here on is that with the kind of concerns we are looking at, you shouldn't, one, be short on gold and silver because the fundamentals are still very supportive. You could be looking at dips to continue to buy into gold and silver. Gold prices, for example, in last 1 month or so have not broken below $1,970 per ounce. So that is a strong support. On the higher side, the chartists tell us that for the week, if the gold prices close above $2,075 an ounce, then it opens up the way for 2,120, 2,150 kind of levels there. For silver as well, if it keeps above $26 per ounce, then we are looking at levels of $29 per ounce on the higher side as well. So nobody is calling it a profit taking. Nobody is telling you to go short or take money back home. Buying on dips is still a strategy, and further all-time highs in gold and silver is what the street is anticipating. Can I do the reel also, Abhi?